Hey everyone, my name's Andy. My channel's Finding Value. If you like this content, please subscribe, click the thumbs up button. If you're not new, leave some comments. Appreciate it. I'm going to go over my oil and gas picks here. I'm kind of looking at my top 3 picks, saying, hey look, if you only had 3, what would you choose? Again, this is my opinion. Doesn't necessarily mean that you should be following my opinion. So my oil and gas picks here, we'll go into it. So here are my top 3 picks. Again, I'm going to reiterate, I am highly aggressive and I can tolerate a lot of volatility. I'm only using a small amount of my net worth into these picks. I am looking for maximum leverage to the price. These investments might not fit your investment choice. The first one is QEP Resources. It's a small oil and natural gas play. It's mainly oil. It's based out of Denver. The company has debt and was aggressively sold off and shorted into very low valuations. The company has good assets, and I don't think it's going to go bankrupt. Massive upside potential when oil goes higher because all those shorts are going to have to cover that. They're going to have to cover for themselves, and you're going to have buyers buying it. And if they don't go bankrupt, which I don't think they will, they're going to go far, far higher because that means that all these shorts are wrong, and they're going to have to buy everything back. They have extreme leverage to the price. This does have a lot of risk if you're not used to big, large movements. The Wilkes brothers, who are billionaires, own shares in this company. They have a stake in it. Their operations are in the Permian Basin and Williston Basin in North Dakota and Texas. The next one, Contango Oil and Gas. The company's in the Permian Basin, has some offshore light, shallow water in the Gulf of Mexico. They are acquiring assets on the cheap. They're going around buying a whole bunch of stuff. They're doing it right now because everything is cheap, and they're getting on it, getting stuff in their portfolio to increase value for shareholders right now. And you can see it. They're acquiring so much stuff right now. They're merging with companies. They just acquired another asset a couple days ago. It's backed by billionaire John Goff. He owns a 30% stake. I like backing myself and aligning myself with other billionaires who own the company. I like their approach to the oil and gas industry, and I agree with John Goff's approach of acquiring undervalued assets and using the company as a store of value of all this oil and value that they're putting underneath it. So the company is just a blanket for a whole bunch of value that is mainly in oil, and they're trying to acquire everything right now. So I'm getting in alignment with him, and I'm gonna ride this train, Contango oil and gas train. Another one is SM Energy. The company has some debt. I think they have it under control. The market didn't think they had it under control, and everybody was worrying. So a whole bunch of short sellers piled into this company to short them and drove them into the dirt. Hedge funds are now buying this company. I bought the company quite heavily at $1.50. I loaded up because of the valuation and the assets that they have. They have a lot of assets that are good, and I think they will do extremely well during this next bull market. And if prices can remain elevated, I'd say above $50, $45, $50, I think they'll have no problem paying off their debt. They have, the Eagle Ford Group, which I think is shale, and Permian Basin in Texas are assets that they own. So again, these are high risk plays. My top picks they're all very high risk here because of the debt they hold. I do not recommend everyone pile into all their money into these things. If you're looking for another lower risk bet, I would look at Suncor Energy. That's also an excellent company that I have some money in. I would stay away from some of the majors as some of these guys, they're confused about who they are. Are they oil companies? Are they alternative energy companies? They have an identity crisis, almost. And I like the smaller oil and gas plays. It gives you more leverage to the price. And I like a whole bunch of natural gas companies too, up in Canada that I like, that I'm putting money into and piling into. So the conclusion here is do what is best for yourself. You don't have to copy my highly leveraged plays and pile a whole bunch of money into these things. These picks are highly leveraged to the price of oil, and I only put a small amount of my wealth into them. Perhaps a mutual fund are a better play for you if you want a lower risk play. I own some in my 401k in mutual funds with larger sums of money. So those are my top 3 picks. They are extremely high, high leverage to the price, high leverage using debt. They were heavily shorted, and these things are going to blow up to the upside. MCF is not nearly as indebted as the other two. QEP and SM are they have a lot higher debt ratios, and they were highly shorted in this pullback. and I'm taking a bet against those shorts. That's how these things are going to rocket higher. And if the price comes back, if everything smooths over and demand starts coming back and COVID goes back down, which it will eventually, these companies are absolutely going to crush it, in my opinion. Yeah, you could start moving decimal places over. $1.50 becomes $15, which becomes $150 per share. So I understand the value here. I'm piled in with my speculative money, and I'm ready for the ride. So if you guys like this content, please subscribe, click the thumbs up button. I appreciate you guys listening. This is Finding Value.